What's going on YouTube? In this video, I'm going to be teaching you guys about key levels. I'm going to teach you how to trade them and how to draw them. What are key levels? Key levels are one of the most basic forms of technical analysis when it comes to trading. Key levels, also known as support and resistance lines, are handy when you're looking for an area to enter a trade, take profit, or spot a reversal. These levels are formed when the market is having difficulties to break above or below. When price reaches a key level, sellers may jump into the market sending it lower, and same goes for the buyers. Key levels tend to be in round numbers, such as 50 or 100. Many people think in terms of round numbers, so this also carries over in the stock. Things to remember. You can find key levels in all time periods, including daily, weekly, and monthly. The longer the time period, the more significant the level is. The bigger the wick is on the candle, tapping the level, the more significant the level is. Reality. Technical analysis is not an exact science, and sometimes price will dip below these levels or reverse before it even gets to the level. You must be flexible when interpreting these chart levels. There's nothing magical about these price levels. It is common that many market participants are acting off the same information and placing their orders at similar levels. The ability to find key levels should be a tool used in your trading to help you make better decisions about your entries, exits, and stop losses. Make sure when you're placing your key levels, you're watching volume in that area. Volume tells you the whole story. Without volume, the key level doesn't mean anything. The more buying and selling that has occurred at a particular price level, the stronger support or resistance is likely to be. How to chart key levels. Go on your charting software and look for a common area of rejection. It has to have been touched at least 3 times. As you can see on this level, it has been tested 6 times, making it a very strong key level. Then place a horizontal line. Now you have your key level, an area where the probability for a reversal is high. Key levels can be placed as support or resistance as long as the level has been tested over 3 times. As you can see in this chart, you could have used this key level for a breakout trade because past price action is telling you that the stock has had several attempts of breaking this key level to the upside. Of course, volume will tell you everything. So now that you guys know how to draw your key levels, I'm going to be going over some key levels on the SPY chart right now. I personally like to draw my key levels from the 4-hour to the 1-hour time frame. I don't like to go any lower than that just because those key levels tend to be weaker. So right here, we're on the SPY chart on the 4-hour time frame, and we're going to look for some key levels. All right, as you can see, we have a key level right here at the 401.3. We know this is a key level by the amount of times it's been tested. As you can see, it's been tested 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 times, making this a very significant key level. It's either been used to play a breakdown or a breakout, and it's also been used as reversals, as you can see right here. So as you can see, finding key levels are pretty simple. The hard part about it is determining what makes a good key level and what makes a bad key level. Like I mentioned, the more times it's been tested, the stronger the key level, and the bigger the volume, the stronger the key level. So when you go around your chart looking for key levels, it's important to remember what I mentioned about key levels being just a reference point. It should be a guide in helping you make the right decision, whether it's a place to take profit or a place to put your stop loss. I also mentioned it's important to be flexible with your key levels because sometimes price will go a little over the key level and then reverse, like you can see on this level that I found right here, 390 on SPY. As you can see, it showed resistance right here. It wicked above, shown a rejection, then came back, used the resistance as support now. And right here, when it did that again, you can see that it wicks below the key level, but it continues going up like it should. It's important to look at these characteristics when you're drawing your key levels, just so you know what move to expect and why it's happening like that. As you can see, on many key levels, there's always a wick above, and that's where people get stopped out, and that becomes a pivot point for entries. And that's something I'll be going over later in my strategy on how I use supply and demand and pivot points to make my trades. But I hope you guys found this video to be useful and helpful. I hope this could make an impact in your trading journey. And if you guys have anything else you want to see, please drop a comment down below. Thank you for watching, and I'll see you guys in the next video.